challenged to change ourselves. So that's what is happening. Thank you.
Friends, right from morning, we had 4 technical sessions. We have the men in blue here with 3 mics. You are open for questions, and let me also invite the author of Handbook on Companies Act 2013, C.S. Dhanapal, to the dais to help us on the question answers. Somebody commented, having a wife is part of living, but living with wife is art of living. Now, after hearing the 4 speaker session on Companies Act, prescribing law is part of government, but practicing law, corporate law, is art of, for corporates it is art of corporate governance, for professionals it is art of professional governance. Friends, I'll to trigger the questions, let me put first question to our speaker. Now, section 131 speaks about it is only recasting of financial statements. That means going into the books of accounts and changing the entries is not possible. Am I right, sir?
Right.
Good.
Right.
Yeah.
In fact, I'll just add just
Sir.
on the lighter side.
Yeah.
See, you're talking about a joke, no? I mean, as accountants, always I think everybody thinks that accountants complicate even small things and they do literally hair splitting and all this. I mean, one of my friends shared one joke with me. He's just saying, uh, there was a lady and she was having a serious illness, right? She went and consulted the doctor, and doctor said, you have cancer, right? And you will die in 6 months. So then she started crying, and doctor said, no, I mean, probably you have to get prepared for that. Why are you crying? So no, I'm going to die in 6 months. I want to live long, and is there any way by which, in fact, I can live long? So then doctor thought for a while, and then asked, are you married? She said no. So then the doctor said, why don't you go and marry an accountant? So then she was asking, oh, then she got damn excited, Then she was asking the doctor, oh, if I kind of go and marry the accountant, will I live longer? Then doctor said, no, you may find 6 months to be too longer period. Right? So just imagine, now with all these confusions and additional responsibilities and all this, probably I don't know whether it's going to be 6 months or 6 days. Just on the lighter side. Yeah.
So, yeah. So we discussed in detail about the responsibilities, roles of statutory auditor, but we have left out another busy. Many chartered accountants are playing the role of internal auditor. Under the CH 2013, where do these stand?
See, as far as the internal audit is concerned, the Act says, as of now, for the purpose of internal audit, other than the CARO requirement, where in the statutory audit report you talk about adequacy of the internal audit, there is nothing as such in terms of a legal framework. But for the first time, the Act said internal audit will be done in a particular manner as prescribed. So, in fact, the rules which currently, draft rules, so we have consciously not touched anything at a draft stage, but at the current level now it gives flexibility to the audit committee to define the scope and also the expectations of the internal auditor. And the audit committee could decide that the internal audit could be done only by a chartered accountant, and they have to cover 1, 2, 3, 4 areas. They could define how frequently it has to be done, what should be the periodicity, what they have to report. That can be decided by the audit committee. That's how they've dealt with it as of now, but we have to wait and watch for the final thing,
Now, to add to that question, what our participants asked, what is any prescribed minimum qualification in law for conducting internal audit?
Anybody can do the internal audit, in a way, but actually the audit committee now the way in which the law reads is audit committee can prescribe qualifications saying for my company, if internal audit has to be done, it has to be done only by a chartered accountant, cost accountant or any professional. So that's something probably, yeah.
The law prescribes as of now, the present Act 2013, the law prescribes that internal audit can be done by chartered accountant, cost accountant and any professional. So as of now, there is no specification or definition in any act. Leave at all, even Companies Act 2013 also, you can refer any other act of any other laws of our land. There is no definition for word called professional. Probably taking clue from regulations of the Institute of Chartered Accountant, they have notified Super 6 as a professional to have a LLP. We can't take that as a reference to give a meaning of the professional that's referred for internal audit. So possibly we can presume the government is under impression that internal audit can be done not only by chartered accountant or cost accountant who is capable of doing internal audit, who should be professional, professional which is settled in the country. That means the terminology professional now settled for few qualifications. Probably that may be considered, but government is to come out with a clarification on this aspect. Otherwise, as you say, as I referred earlier, as he referred also, anybody can say that I am a professional and I am capable of doing internal audit.
Subject to the board's confirmation.
Fine. Of course, anything with regard to internal audit, board has to approve.
Sir, excuse me. You were mentioning about depreciation and you were mentioning about useful life. Now, if you take companies, we were earlier charging of depreciation 5,000 and less. But now, can a company take a useful life of, say, mobile devices, laptop, as 1 year or 2 years, and can they depreciate it?
See, basically now, what has occurred is, the Act actually identified the useful life for certain industries. And if, let's say, I think if there are assets which are kind of, I think, used in those industries, the useful life is stipulated by the Act. For other cases, technically the option which is available for those of using any other rate, any other year or the life as determined by the Act is not applicable. So in your case, you don't have to go by assets costing 5,000, let's say you take your mobile, I'm just giving an example. Till now it's mandatory because mobile cost is 4,000, you have to write off 100%. But now if, let's say, the mobile that you are considering is part of a particular category and that useful life is fitting into the schedule given in the Act, you can depreciate it as per the schedule given in the Act, not necessarily 100%. But you can't apply it retrospectively. All are prospective, because one of the things that is very, very important is somebody was asking whether can I use those provisions for the purpose of restating whatever depreciation which I have provided and then adjust it in the retained earning. No, that cannot be done.
The second thing which I wanted to ask you is regarding, we have an investment company in India which is a private company and it has got overseas subsidiaries, step down subsidiaries overseas. So you are saying that the subsidiary consolidation should happen at every level?
See, basically as far as the Act is concerned, now currently it says the consolidation is applicable for a company in India, right? So if your step down subsidiary is situated abroad, then the step down subsidiaries consolidation will not be applicable as far as Indian territory is concerned. So the Indian parent will do the consolidation, and in addition it will also get the standalone financial statements of those subsidiaries individually, as of now presuming in accordance with Indian GAAP, and file it with the Registrar of Companies. You don't have to file a consolidated financial statement of a step down subsidiary which is located outside the country and file it with ROC. That is not there. It's only the standalone of those entities separate. Consolidated for an Indian entity, but within India, if you have an intermediary,
so that Indian entity has got a level 1 subsidiary in, say, UAE.
Yes.
And the UAE company has got another subsidiary down below, which is a manufacturing or a trading subsidiary.
Correct.
Then
what would happen is the Indian company will do a full consolidation of everything. that is all consolidation of all, including step-down subsidiaries, there will be a consolidated financial statement. You don't need to have a consolidated financial statement at a UAE level for Indian reporting purposes. But in UAE, if you have a separate reporting regime, that is separate. You don't need a consolidation at a step-down subsidiary level outside the country. But if the level 1 subsidiary is within the country, then you need to do the consolidation.
The third point which you were mentioning was on the internal control evaluation
Yes.
in the auditing standards.
Right.
There you were mentioning something similar to SOX requirements might
Yeah.
come up. But still you are saying the rules are not come.
Correct.
But is it going to be the level in which the Sarbanes-Oxley internal control requirements, is it going to be similar to that? Or
Our understanding is this is going to take that kind of a level, because that's what is the expectation of the regulators. When you go through the minutes of various parliamentary committee proceedings and other things, because what they are looking at is not an overall comment at a macro level. They are looking at something in detail similar to, because majority of these reporting requirements, if you look at it, these are driven by global expectations and then commitments given by India as a country to various nations. There are G20 commitments, there are various other commitments which are also driving. Incidentally, I may mention there's NFRA also is part of one of the commitments for SEBI. You know, this is a long pending requirement from a SEBI, because SEBI being a member of IOSCO, which is an international organization, the IOSCO requirement is each and every country need to have an independent regulatory body reviewing the work of a professional. That is the IOSCO requirement. So they won't accept professionals regulating the professionals' work. That's something which is not an accepted international practice. So SEBI has been pushing the government, being a member of IOSCO, that you need to come up with something of this sort. This is also one of the reasons for NFRA. So to that extent, as far as internal control is concerned, yes, this concept has been introduced primarily because of how the Western world looks at these sort of things. If you look at the level of detail it has to go, like in terms of sorts, probably I think the hope is ministry will come up with detailed guidance in terms of what is ICFR framework and how detailed it has to go, what sort of work needs to be done by the management, because it's not like a simple thing saying internal controls are fine. You need to demonstrate, because board in their report, actually if you look at it for listed companies and other class of companies, board has to make a categorical statement that the internal controls are operating effectively. Then they have to make a categorical statement, and remember, now the act has opened up a lot of other recourse mechanism, including class action and other things. If they are making an incorrect statement, if there is going to be a problem at a later date, there is going to be chaos and litigation. So the board also needs to, as part of its due diligence mechanism, they have to necessarily do a detailed work to make sure they can make that statement. Then obviously auditors need to endorse it by way of performing procedures to make sure that the internal controls are indeed operating fine. I'll see, in terms of board's requirement, it is applicable only for listed and prescribed class of companies. Board's requirement. Interestingly, when it comes to audit requirement, it's applicable for all companies. As of now, there is a sort of a dichotomy, you know. So just imagine the position of an auditor. For listed companies, board will be interested in ensuring that everything is done. But when it comes to unlisted entities, it's going to be a challenge for the auditors, because they have to comment about this, but management would not have done anything because there is no statutory requirement as such.
Sir, this is on the reopening of accounts.
Yeah.
Can I start?
Yeah, madam, you can.
Yeah, so this is on that reopening of accounts which you are mentioning. You said for it can be up to some 2 years,
3 years.
2 to 3 years earlier, and the impact will be on the P&L. So what will happen to the, are we to go to the shareholders again for adoption of accounts?
Yeah, basically I think what the act says is, when you restate, then you have to go through all formalities that you will go through similar to your normal accounts adoption. So you have to necessarily send the financial statement to shareholders, you have to call for shareholders meeting, they have to approve again, board has to approve, then the shareholders need to adopt, everything needs to happen.
Okay. So and it will be at the AGM only.
That's right. I mean, let's say I think in between, if a restatement occurs, then they will call an EGM exclusively for the purpose of approving the restated accounts. In case, let's say, I think that needs to be completed. just I'm looking at a scenario, let's say you completed the current year reporting obligation. Immediately after that, sometime in December, you are finding out that yes, there is a need for restatement. Then you don't have to wait for the next AGM. If you want to get the shareholders approval, then you will complete the process and get the shareholders meeting on, you know.
Is there any clarity on this, how to decide on the arm's length transaction?
Arm's length transactions from accounting point of view, audit point of view,
How do
tax
you
point of
decide?
view.
Like, how do you decide? Or you have to take the market price as a,
See,
especially for business related services?
see, arm's length, in fact, let's say I think from there is an auditing standard which talks about related party transactions.